Regardless of the structure selected for your project, implementing a controlled insurance program, CIP or CIP for short, is a unique way to manage a multitude of insurance challenges that arise on construction projects. The CIP structure provides significant advantages to a project, which include dedicated insurance limits, completed operations coverage, a reduction in cross-litigation since all enrolled parties are insured under the same policy, increased opportunity for MWDBE participation, and of course, high potential for direct insurance cost savings. Owner-controlled insurance programs, OCIPs, and contractor-controlled insurance programs, CCIPs, fall into three main varieties. These are single project placements, rolling programs, and GL only. Let's talk about single project placements first. A single project placement is a custom product tailored to the specific needs of a project being insured. The coverage provided includes workers' compensation, general liability, and excess liability. The total limits purchased generally range from $50 million to an excess of $200 million, with deductibles starting at $250,000. The carrier selection, coverage negotiation, and program design all take place in the months leading up to the project construction start date. Single project CIPs tend to work out best and yield the greatest financial results with projects that are over $250 million in construction volume. This is due to the economy of scale present in large projects. Carriers will competitively rate these projects as they will yield higher premiums. If the program is placed as an OCIP, the owner recognizes any cost savings or overrun at program close. As you may guess, if placed as a CCIP, the general contractor retains the financial risk reward. Now let's get into rolling programs. Under a rolling program, the project will be enrolled into a pre-existing insurance program with a set carrier and established terms, conditions, and pricing. The coverage provided, remember that's workers' comp, general liability, and excess, the limits available for purchase, and the work necessary to place and administer the CIP, as well as the financial risk reward, are identical to those of a single project placement. The difference here is that a rolling program is designed for an entire portfolio of work rather than a single project under one program. Only general contractors and owners with a steady flow of work can support the project enrollment requirements of an annually renewing program. The main advantage of a rolling CIP is certainty, as the owner has already negotiated the particulars with the carriers and can deploy that program as projects begin. Rolling OCIPs and CCIPs typically support projects under $100 million in construction volume, as a project of that size generally cannot support the premium required for a dedicated CIP. As with single project placements, the sponsor retains the financial risk reward for the program. Last but not least, we have general liability only or GL only CIPs. These have become very prevalent over the last decade. These CIPs are designed to provide GL and excess coverage only for the enrolled parties and do not include workers' comp. They can be placed by the project owner or the general contractor. For projects covered by a GL-only CIP, the workers' compensation coverage remains the individual responsibility of the contractors, including the subcontractors working on the project. The GL-only CIP structure has unique advantages. They have the benefit of a lower retention, in some cases as low as $50,000. There's no requirement for collateral, and GL-only CIPs have a reduced administrative burden to the sponsor since contractor enrollment does not require the tracking of payroll. A disadvantage with GL-only CIPs is the reduced ability of the sponsor to obtain a financial benefit. With the workers' compensation being provided by the individual contractors, the cost of that insurance is based on the contractor's size and may yield a higher cost than a single workers' compensation placement for the entire project. Additionally, some contractors may include a provision for deductible funding within their contract price, leaving no opportunity for savings to the sponsor as a reward for providing safety, loss mitigation, and claims management for the whole project. GL-only CIPs are most common for projects that have very unique risks or with sponsors not interested in the financial risk-reward outcome seen in a loss-sensitive program. As a highly specialized insurance services firm, TSIB focuses on the construction industry and CIP placement. TSIB has the skills, personnel, market reputation, and experience to evaluate all CIP options and ultimately implement the insurance solution that best meets the needs of our clients and project stakeholders. Reach out to TSIB to learn more.